All right, good evening, everyone. Futures Brizio here. It's now 5:40 p.m. on Thursday, November 6th, 2025. Hope everybody had a great day. I did drop a video earlier today just on like I guess it was like a midday update on the market. But I just want to jump in here and do another end of day quick review here. So we should make this pretty fast. So as always, make sure you smash that like button, subscribe to the channel. Any questions or comments, leave them down below. So I wanted to take a little deeper dive into crude oil here. So go over to my MetaTrader account first. So this is December crude 4-hour chart, and this is the video part of what I made earlier. This is a Heikin-Ashi chart, and we did seem to break some support here today. So I was saying, if we get a retest back towards this line and then potentially make new lows and continue this downtrend. But I did want to kind of talk about the other side of that over here on TradingView. So this is the basically the combined chart. So just so you get a little bit further look back on prices. So this is crude oil futures here, and let's go to a higher time frame. Let's go to the weekly chart. So if we zoom in on the weekly chart, we can see, a potential little triple bottom sitting right here. Now, if price, which is where we're back at now for a potential quadruple bottom, which I'll show you on the lower time frame, that we're approaching again here. Now, if we get through here, there isn't any real major weekly support until we get down here. But here's the problem I have with shorts. Yes, from a technical standpoint, this market is set up to potentially go lower. But from a fundamental standpoint, these prices are pretty low now. And as much as Donald Trump is, trying to drive up supply and increase production, which has been a huge factor in prices going down, there's only so low the market's really going to let it go, only because of profit margins really begin to eke and wear out with oil producers if it gets too low. So the producers at some point are going to start holding back, whether it's OPEC or U.S. production or whatever. Now we have this extreme low. This was the COVID crash where prices actually went negative, which is unbelievable for a short period. But even if you go back up to where they actually ended up closing, we're still at $15 a barrel. And at $15 a barrel, I don't know what the break even is, but I would think it's probably more than that at this stage. Maybe 50 years ago, that was a good price, but not now. And so I think, fundamentally, it's hard to make a case, although, again, technically the prices are still look like they could go down more, but it's fundamentally hard to make a case for this prices to continue a lot lower. So here we're back on the daily chart, and again we can see this, triple, maybe quadruple bottom setting up here with a tap here, tap here, tap here, and maybe it comes down and tries again. And another possible scenario for the downtrend kind of reaching its end, and that maybe this move up is just in a corrective phase down, and then we will eventually break higher here. Now, to me, this level right here, where I have this yellow line, this is kind of our structure level right here. Okay, this was the last swing that led to this low. So to me, this is the structure level. This is the key level I'm watching right here. But if we look at this on a 4-hour chart, what I have drawn right here is an ABC corrective pattern. And I'm not going to get into Elliott wave theory, but for you Elliotticians out there, anybody that's ever used Elliott wave, this could be another thing we're looking at, that this is a big ABC correction. So we have what Elliott says is that you have these corrective waves, and one of the more popular ones is called a zigzag. It's an ABC. And so it follows after a run up. So we have this big move up. We break all this market structure here. And then we have this A, B, C. And then when the C concludes, prices tend to go up again. And a lot of times A and C are about the same length. So I measured it with my measuring tool. And the measuring tool, the C wave would come down to it works out right about here, where we have this we have this little zone right here, which you can't really see too well on the 4-hour chart. But you can see this one bearish candle. And so, you can make a point either way here. If price comes down a little further, if I would, let's put it this way, if I was looking to take a short here, which I'm not saying I would, but if I was, my short-term target would be to this yellow line, which is this C wave, and then I'd see what happens after that. If we continue to break lower, then my next target would again be back at these previous lows, which is this is that third tap on that zone on the higher time frame is right here. So if it did get through here, my next target would be down here. But a short-term trade, which would probably only take, honestly, probably a day, maybe day and a half, to come back down to this range, and then we'll see. And if it does come down here, then the new zone will become right here. The new swing high would be like over here, wherever this ends up turning and going down. Then I'd move this yellow line down. So let's say it turns from here, I would drop this line down. That would become my new swing, but that's not what it is right now. It's still sitting right here. So I just kind of wanted to point that out that, you can look at things from technical and fundamental standpoints. So again, on the weekly chart, if we did manage to break lower, then I think we would have a clean run down to here. But I would just, that would be about $35 a barrel, which is possible. But we'll see what it does, but again, we do have, at least a triple bottom here, and we did have more of an impulsive move up here, but it didn't take out any major structure. That's the other thing. If we look at this move up here, right, it didn't take out any major swings on the daily chart, right? We have a couple little minor zones in here on a shorter time frame, like right here, and then there was another one like down here. You can't really see it on this time frame, but major swing points on the daily, you got this one right here, and look what it did. It came right up to it and rejected off it. So you can definitely make a case for lower or higher prices here. I can make a case for lower prices just based on the technical patterns. You can make a case for higher prices based on technicals and potentially fundamental drivers too. So it's going to be an interesting one to watch. I think you still have to call this a bearish market for now. I don't think there's any reason to say it's not still in a bearish move. And again, here are those minor swing areas that we violated. But again, on the daily chart, you can't really see these. And again, it was this area up here that price came right up to and rejected. Okay, so the question is this just a continuation of the downtrend, and we're in the middle of the next leg down, or are we going to form some kind of corrective pattern here and then break higher? So again, to me, this area right here is key right now, assuming it doesn't make a new low. Any break of this would signal prices are going higher, but I wouldn't be surprised to see price come down a little bit more, maybe come down to this area if this corrective pattern plays out, come down to where this C level is here, and then finally move higher. And so we'll see. That's what I'm looking at for crude oil. So I did want to do a little bit more of a deep dive into crude oil, just based on what this looks like right now. And I'm perfectly happy just watching it. But like I said, if there's an opportunity and it happens during the New York session, unfortunately, a lot of these moves do happen during London. Like these last two down legs, like this one right here and the one that happened today, these all happened during the London session. And even this one back here, same thing. I'm just looking at the time on my broker chart. 6 a.m. This was all, pretty much when I'm not on the charts. I don't usually get on here till about 8 o'clock. So by then these moves are already happening, and I'm just not going to, chase them, because you can see by then, by the time we get into the New York session, that's usually where things either just, die out. So unless you go into the New York session in a pullback, it doesn't usually end up working out. But if the setup is there and I see it, I may consider a long, and I'd probably put a TP like right about here and then just see what happens after that. But I'm perfectly happy just waiting too and see if we do get the bullish bounce and then start taking out structure, and then I'll be more apt to trade it long. So we will see what happens. So that's crude oil. Corn continued to do nothing. We did, like I said, we were putting in some higher lows, but we failed, and prices have come right back into the range, and we're just trading inside of this range. Again, it's a 4-hour chart, so it is a longer time frame, but I'm just not interested in anything while it's inside this range. So, soybean meal, again, it looks pretty bearish right now. Seasonally, we should still be going up, but maybe this run is as good as it's going to get. This is a very clear double top, obviously a structure that we have not seen in a long time, in at least a month. Really, last time we saw any kind of double top was back here in August, here, and price took a big sell-off. So is this going to be the start of a downtrend? We're going to see. We broke through the structure today and then closed, back around the breakout area. So the question is going to be, is this just a liquidity sweep and we get a strong bullish push back to the upside, or are we just going to get like a little dead cat pounce and have this roll over and come and continue lower? We'll see, but I will be keeping a very close eye on all of these. Soybean oil. Again, looked like it was going to try to break out today on the video I made earlier today. It did not. It came right back into the range again. So I'm looking at this. Even though it did not break this structure technically, it doesn't look good. So to me, this was probably just a liquidity sweep, and that would fall in line with the rest of the soy complex. So we'll see it. This isn't the cleanest one versus soybeans and soybean meal. But it is showing potentially weakening prices. And then over to soybeans again. I got all these things on here. I don't want to cloud the chart up too much. These are what I drew on my video earlier. But basically, again, same thing, double top here. Had a big push down. So, the question is, are we going to get a pullback and then a move down? Or are we going to swing and go back higher again? This one looks pretty ugly too in terms of regaining bullish momentum right now. It's pretty bearish. We put in this double top, failed to make new highs, and then had a very aggressive move down here. These are Heikin-Ashi candles, but it does take the noise out. You can kind of see this whole time the bears were definitely in control. There was, even though they're on a regular candlestick, you'll see some bullish candles mixed in here. They're of no consequence. The average price on the way down here never was positive. So you got no bullish candles painted. So, so it's looking pretty bearish. So at least in the short term. So we'll see what happens. Lean hogs, again, nothing going on right now. Still in a downturn. I'm not going to be trading this until if and when we finally get a turn on this. We are approaching, again, another major lows here. We've got a double bottom here. Now it's still a ways off. It could take a couple more trading sessions for it to get down here of negative sales to get down here, but we do have a major support area where prices bounce from twice with pretty aggressive price action. So this is not an area I'm looking to necessarily short. I'll let this do its thing, and if we start taking out any smaller structure, trend line breaks or whatever here, then I might look to go long on this, but not right now. Rice has just been in a tear to the downside for a long time here, as far back as I can go on this chart. We are looking like we're struggling here getting through here, though. Again, I just have this line drawn just for visual purposes, but essentially 1, 2, multiple touches on this general area here, even if you don't count this one. Multiple areas on this zone right here. If we look at the rice combined chart, let's zoom out a little bit here on trading view. Daily, still like nothing to the right, to the left here. But again, if you look way over, and again, I don't really necessarily buy into this, was so long ago. I mean, if you look way over here to the left, this was literally more than 5.5 years ago back here. These are the lows that were put in on rice before this run up. this big run up, then we have this huge sell off that I don't know what this was all about for like 2 weeks. Oh, this was yeah, no, that's COVID. Everything crashed, and then it recovered and went up, and then the downtrend continued. So, um, but again, nothing I'm looking to participate in to the downside. I really have never traded rice. I'm not really super comfortable with the market, but it's a grain complex, and because of COT data and seasonality, I was watching it. But I'm not all that too keen on it. But I'll watch it, and if we get some structure break and it looks like this downtrend is finally exhausting, it could be a good chance for a bounce and trade it back up. But in the meantime, I'm just leaving it. I'm not touching it, especially at the levels it's sitting at right now. British pound. Now, I was talking this morning, and when I was in here this morning, price was sitting at this level right here, right? This previous support being resistance. It has now since gone through there. So I was not triggered. I had a sell stop on my funded account. I'm glad I didn't just take it at market because it wouldn't be a good trade because I wanted some confirmation. But again, as long as we hold this current area right here, it's still bearish. So if we get through this red line, take out these highs, then my bias will switch more long. So we'll see. If that's the 4-hour chart, if we go to the 1 hour, this was that area here where we saw these couple of red candles. But you can see there was no momentum behind them. So even though price tried to sell off here, you can see this area right here. Everybody else sees the same level. So the sellers try to come in here and, sell this resistance, previous support, and that failed. So, the bulls were definitely still in control. We had two bearish candles here, but they were very weak dojis, and they really were of no consequence, and price just kept going up. But we are approaching now another, the actual resistance area zone, basically, essentially like this. And so this is what I'll be looking for to get prices up in here. If we get a clean break on like the one, and when I talk about clean breaks, I talk about the 1 hour chart or higher, because you can have a clean candle close above a zone like this on like a 15-minute chart that's going to look really bullish, but you flip over to an hourly chart, and by the time that candle actually closes, it actually just has a big wick on the hourly chart. And on the 15-minute chart, the body might be closing because, of course, an hourly candle is made up of 4 15-minute candles, right? So that one or two of those 15-minute candles may be really bullish, but at the end of the day, it closes lower and you have a big wick. And to me, that's more accurate than, what a 15-minute candle is showing. So I like to see zone closes on at least a 1 hour chart, with strong momentum, and not just, a short time frame, one candle pattern that's just meant to suck people in, breakout traders in. So, I think you still have to look at this chart bearish. And this might be a good area right here. But we'll see when it gets up there what it does. And if we jump back over to trading view, we'll look at this. That's Aussie. Okay, here it is. Excuse me. Here's the combined chart. It does look like it wants to roll over and keep going down. On the weekly chart, we've got some major support sitting down here, but that's obviously a ways off on a weekly chart. So we'll see what happens. I think, shorts in this market, if that area holds, are valid at least down to probably this area right in here, which again is still quite a ways away because this is a weekly chart. This is probably several days of price action to get it back down here. So in the meantime, I'm still more bearish on this than bullish. And I will watch this. I did move my, on my funded account, I did move my limit order. I don't know if it's even still showing if I'm logged in right now. No, doesn't look like I'm logged into my account here. So anyways, doesn't matter. I'm just watching this area, and we'll see when it gets back up near this this area here, what it ultimately does. And we'll see. But again, if we do get through there, then this will become more of a bullish posture. But right now, this still looks fairly corrective, very aggressive, but fairly corrective. Um, so I'll be waiting, and I'll be looking for a structure change on like a 15-minute chart to see, price fail, you know, come down a little, come up, try to break higher, fail again, then that would be the signal. This is about where we were looking today. And this didn't look very bearish because you can see when I was looking earlier today in this area, we had this higher low put in where price broke higher, came down, bounced off this area. It failed to even come close to taking out this low. So that's why I only took the stop order, because I didn't feel confident this was. It didn't look like it wanted to go lower. It was going to continue to go higher, at least back up towards this higher level, which that's what it did. The price action since then. But this is all just end of day, small range after market hour. So this doesn't really mean anything. So, but the actual, trading action during that time was pretty bullish. So, but anyways, we'll see what happens when we hit that area. If we get a rollover to the back to the downside, or whether we're going to smash through there and change the direction of the trend. In which case, my bias will change. So, all right. So that's it, guys. I just wanted to do a quick end of day wrap and a little bit more of a deep dive on crude oil, and just consider those things when you're looking at charts. And technicals are great, and some people say they only trade technicals, and I think that's okay for the most part. But I do think you have to have a little bit of just common base knowledge about what drives a particular market, because it's not the technical patterns. It's the fundamentals. It's supply and demand of the product or the commodity or whatever it is. In the case of an asset like oil or, soybeans, right? It's just basically supply and demand driven, and expectations for future supply and demand. So, it's a little bit different for things like currencies. It's more based on macroeconomics, economy things. But that's still like a supply and demand at the end, but it has to do with just investment in a particular currency. So, but anyways, so that's it, guys. Hope that was helpful. Make sure you smash that like button. Any questions, leave them below. Subscribe to the channel, and I'll be back tomorrow. I'm sure I'll make at least one video tomorrow, and we'll see if we get anything, any trades for Friday. All right, take care, guys. Talk to you soon.